Hey guys, and welcome to the Working Money channel. So it looks as though Bill has received his Ledger Nano X. Thanks for sending me the photo, Bill. I did just give away 2 Ledger Nanos a couple of weeks ago, and I am really happy to see that you did finally receive it. So again, thanks so much for sending me the pic. Guys, I can't stress this point enough. As crypto moves higher, we're going to start seeing more attacks on exchanges. I've been reading stories all over Twitter about people being defrauded of their cryptocurrency through some shady extensions that they installed on their browser. Guys, do not be victim to hacks. Keep your cryptocurrency safe. I do have an affiliate link for the Ledger Nanos in every description of every video I do, so you can use my affiliate link if you're looking for a solution to keep your crypto safe. I do, by the way, have 2 more Ledger Nanos. I just realized I had them sitting around my house here. 2 Ledger Nano S Pluses that I may be giving away in the future, but that won't be for a while. So again, you can use my affiliate link if you want. You don't have to use my affiliate link, but I am happy to see that you did receive the Ledger Nano X. Since crypto is heating up, I've been hearing a lot of rumors over there on Twitter. Yassine Mubarak there, here just pointing to some of the facts that we should be prepared for this upcoming 4th Bitcoin halving, okay? As we're getting ready to watch Bitcoin's 4th halving, it helps to remember these anecdotes from past performance. The change in Bitcoin's price in the month following the halving, okay? So guys, the month directly after the halving in 2012, we saw a 9% increase. In 2016, we saw a 10% decrease. And in 2020, we saw a 6% increase. So seems like that's kind of all over the map. The change in Bitcoin's price in the year, though, following the halving in 2012, we saw an 8,800% increase. In 2016, we saw a 285% increase. And in 2020, 548% increase. Observation, the pattern we can see here is that Bitcoin supply reduction effect may not be noticeable in the short term after the halving. However, in the medium to long term, this effect will be significant and very noticeable. So I've been hearing this now from a few sources. Right now, we're seeing Bitcoin declining a little bit. The halving is coming up in 1 or 2 days now. Every day, I feel like I got to come back to this and check for myself. Okay, so now the halving date is back to April the 20th. At 8:14 UTC time in the morning. But we're getting there, guys, either tomorrow or the next day. Medium to long term, though, this is when we're actually going to see, the Bitcoin price move more significantly. Now, Bitcoin at this moment in time still flirting with this $59,000 price level. It did wick down to that level back in early March 2024. Right down in here after we saw this pump to the upside, making new all-time highs for Bitcoin. And we've just been kind of vacillating in this region. And, in the past, we've seen halvings, when the halvings have occurred in the past, we have seen Bitcoin decline over, 2-3 months, sometimes longer. So, this has come to be expected. And it is good every now and then to, get a reminder of what we should be expecting this time around. Now, as you guys can see, sentiment is no longer feeling greedy. Right now, we are feeling neutral at 55 for the Fear and Greed Index. We've got the market cap that's down a little bit to $2.25 trillion. So market cap has decreased as well. 24-hour volume, though, that is up 10.86%. I'm feeling like people are probably taking advantage of this dip in the market to buy up altcoins and Bitcoin. Just a few days ago, I did put an update out on my Patreon for my Patreon subscribers at patreon.com/workingmoneychannel, outlining the trading portfolio, where the coins that I purchased in the portfolio are vis-a-vis where my purchasing price was and where the market is today. And, some of them are actually at quite attractive price points. I got to say, even some of my favorite ones there where the charts just look beautiful. And I outline those at patreon.com/workingmoneychannel. We can see, though, people are buying up. I mean, this number has increased by 10.86%. And we're seeing Bitcoin dominance still holding steady. Nevertheless, we're seeing, the altcoin market down. So Bitcoin dominance staying steady, relatively steady. And altcoins, guys, this is where the money's going to go in this next bull run. This is where you can make the most of your profits. Historically, that has been the case. And, we're seeing a lot of these altcoins right now in the red. So very attractive opportunity. And I do think, the Bitcoin halving, although, there's a lot of hype surrounding it, it's not like, the halving occurs and then the price shoots straight up. So we do have to be prepared. Of course, XRP still teasing us with that 49-cent price for an XRP. Here, let me put a brand new price tag on there. Where are we at right now? 49.2. So 0.49235 for an XRP, just kind of hovering in this level of support after dipping down to 42 cents after we did see that initial Bitcoin dip. So, XRP Also, just kind of trending here in that level of support, touching these two levels right in here from back in October 2023. And of course, we saw that level back here in February of 2024. So, dip down. I got a little concerned that we were moving below this trend line. However, it is fighting to move back up here. And we're getting there, guys. Some good news here that I wanted to report. Bitcoin supply to run out on exchanges in 9 months. So due to the halving, we are going to see this supply shock. Supply on exchanges will dry up in 9 months after the Bitcoin halving and continued accumulation by Bitcoin ETFs. So in the immediate future, guys, we might not see that huge boom in volume Bitcoin buying. However, over time, in the 9 months, the supply is going to dry up, and this is likely going to assure higher Bitcoin prices. So they're saying here, supply on the exchanges will dry up in 9 months thanks to the 50% supply issuance reduction, provided that the demand from the ETFs continue, Bitcoin's post-halving supply dynamic will see exchange reserves run out of Bitcoin, according to an April 15th report. And guys, here's what they said in the report. Bitcoin reserves in all centralized exchanges have been depleted faster, with only 2 million Bitcoins left. If we assume a daily inflow of about 500 million to Bitcoin spot ETFs, the equivalent of around 7,142 Bitcoins will leave exchanges, will leave exchange reserves daily, suggesting that it will only take 9 months to consume all of the remaining reserves. So that is a projection outwards of 9 months. And here's a chart just demonstrating that to that effect. So again, there is still the supply that would have existed if we did not have these ETFs now in institutional circles. But now the ETFs exist. So we are now seeing more demand for Bitcoin. And, this is why I think we did see Bitcoin go up past its all-time high before the halving, which we have not seen before. So Bitcoin demand is up. The halving is happening in 1 or 2 days. Bitcoin is down. I know some people are panicking. Lady of Crypto here wanted to share with us a thread of some more in-depth information of what to expect. So in both 2016 and 2020, Bitcoin had the pre-halving dip. Bitcoin dipped 30% shortly after the halving in 2016 and 20% in 2020. This halving, it has only dipped 17% so far. So again, dipping pre-halving and post-halving is par for the course. As I continue to say, total to pre-halving dip, which measures the total market cap of the top 125 alts, dipped over 50% in 2016. Depending on when you count from it was 23% in 2020. This halving, it has dipped about 29% so far. So again, kind of normal. It would be disingenuous to say yesterday was normal or expected. That dip was brutal. But remember, Total 2 is the top 125 altcoins by market cap. Some lower cap alts lost 70% or more yesterday. Yesterday wasn't normal, but it wasn't wholly abnormal either. Again, this was from a few days ago, April the 14th. It was a mixture between a standard pre-halving dip and a black swan event. Honestly, you've gotten off easy so far. The last black swan event was the beer flu crash, and that was brutal. Remember when Bitcoin crashed 58% and the altcoin market 68%? That was definitely a black swan event. So bull runs start. There's been rumors going around about the bull run starting early because Bitcoin broke new all-time highs. In my opinion, you've been lied to. Bitcoin has broken its all-time high early, mostly due to the ETFs. And so that's what I was just mentioning there. Social media is a great measure of retail returning to crypto. So guys, that is also something we have to pay attention to. When everybody and their grandmother, this is what I noticed last run on TikTok, okay? On TikTok, I usually don't ever see cryptocurrency because I don't associate well, I do have a Working Money channel TikTok, by the way, but I also have a second TikTok that has nothing to do with cryptocurrency. And on that TikTok, you know how the algorithm works. It's actually quite an efficient algorithm. I was noticing cryptocurrency related content on that account. So when we do see, social media lighting up with crypto content, we do know that retail is really coming in, and that's the time to pay attention and get ready to pull the trigger. And again, guys, I'm going to be going over all this timing and everything at patreon.com/workingmoneychannel because I do not want to make the same mistakes twice. I did not cash out enough of my cryptocurrency in the last bull run, and I'm going to make sure that that does not happen again. Here she continues by saying, traditionally, if you are underexposed, dips are your best opportunity to buy the bull run. So giving you some information here just regarding buying. Every single bull run, some events give you reasons to panic sell in the moment. Those events seem horrible. They seem bull run ending, but they are just distractions. Scared money doesn't make money. Aside from the early break of BTC all-time high, this bull run is playing out just like the other two, albeit more volatile. But volatility hints that this will be the greatest bull run in history, so I'm buying this dip and the next. This one courtesy of Lady of Crypto here on Twitter. I think, again, guys, let's not get distracted. It is important to keep our wits about us. And as I was saying too, Ripple has now hinted at this numerous times, and Monica Long has come out and said it again. So coinciding with this bull run, guys, 2024 into 2025, Monica Long is saying this is going to be the run for real world crypto adoption. And that's a good thing. Listen to this.
But if we zoom out, what's exciting to me is over the longer arc of time, we're seeing growth and maturity in Web3. And I think a lot of that, and what's really exciting about this latest cycle to me, is real institutional adoption. If you think about it, some of the biggest brands in financial services like Goldman and BlackRock and Fidelity, they actually built their products and offerings in bear markets, meaning they see the bigger picture at hand. So I think that's what's going to be really different about this year, is the institutional embrace and takeoff.
Institutional embrace and takeoff. So she mentioned Goldman Sachs, BlackRock, Fidelity. They actually built their products during the bear market, so they had the foresight to understand now that they want to ramp up. They want to, be selling their products in the bull market, which is exactly what some of these companies are doing with their ETFs. But the bigger point, I think, is the real institutional adoption. We've heard it from Brad now. We've heard it from someone. I think maybe we heard it from Brad twice, and now we're hearing it from Monica Long. 2024 into 2025, the real world adoption is going to be occurring at the tail end of this bull market, which means, guys, XRP price and XRP action could in fact coincide with real world utility by 2024 into 2025. Smoke here bringing us some more news with regards to regulatory clarity. Just kind of another assessment here. Around the world, major jurisdictions are pulling stablecoins and the broader digital asset market into the regulatory light of day. So just a friendly reminder, guys, cryptocurrency is becoming regulated around the world. Just as the dot-com bubble bursted or the 2008 financial crisis were necessary preconditions for comprehensive market reforms, new rules, and the strengthening code of conduct among surviving firms, digital assets are broadly enjoying a cycle of maturation, accountability, and ultimately success. So cryptocurrencies, the digital asset space, is going to grow, but it's going to have to grow in a regulated market. Down here it says 2024 may also mark the year that U.S. federal legislation is passed not only for payment stablecoins, but also broader digital asset market structure. Bank failures, 2024 presents an opportunity for convergence and demonstrable market value. So these are all positive aspects that are going to just drive more crypto adoption, guys, just not in the USA, but globally. This is where price is really going to boom. So, they're looking for volume. What better way to drive up volume? Well, it always happens during a bull run. So, it sounds like the pieces of the puzzle are coming together. Wanted to thank Smoke for pointing that out. And speaking of stablecoin bills, guys, these two clowns have just introduced theirs. The worst thing we could do if stablecoins are being misused around the world is to step away and not regulate them. This coming from Senator Lummis and Senator Gillibrand. The new stablecoin bill was just released in the United States. This one courtesy of Bank XRP.
There's been a lot of speculation that there has been money moved through stablecoins and the like and others, through Tether and places like that, to places like Iran and Russia and others. And how concerned you are about that and how that relates to a bill like this.
Well, I think this bill is the first step towards really addressing illicit finance. This stablecoin legislation creates a framework where it rests on top of the dual banking system. It uses the protections of Know Your Customer and anti-money laundering protections in the banking system. This is a bill that's written to have 100% one-to-one dollar-backed. Custody has to be in a bank, and so you have all those protections in place in our ordinary banking system. And so this is bringing that level of transparency and accountability into blockchain and cryptocurrency. And the first, and I think the most important piece of this legislation, is to take stablecoin and put it into a proper regulatory framework so that we can have consumer protection, we can have transparency, accountability, and we can have certainty.
Yeah, the worst thing we could do if stablecoins are being misused around the world is to step away and not regulate them. The whole purpose of this bill is to protect consumers while we acknowledge the existence and use of stablecoins. And furthermore, Senator Gillibrand has included some language from the FDIC that in the event there were an insolvency or a failure, a conservatorship or a receivership could be set up. So it's contemplated that even with our one-to-one reserves that we require and our decision not to allow algorithmic stablecoins, if something did fail, we have that safety valve of the FDIC receivership language.
We also require that if a stablecoin is issued, that it's done by its own entity. It has to be a subsidiary, right. It has to be walled off, and it can have no commingling of funds with other assets.
Yeah.
I gotta say, there are some good points in there. Not all bad. They do, keep pushing this point home that they want to protect investors. Yeah, we get it. You want control. We understand. Ultimately, government wanting to control money is nothing new. But I think the bigger point here was to prevent or at least limit bad actors in the space. XRP drops also commenting on the stablecoin bill, okay? And Tether is apparently in the crosshairs of the U.S. government. Tether, the world's largest stablecoin with a market cap of more than $100 billion, would not be classified as a stablecoin under the proposed CFTC Taxonomy Act. So, strict stablecoin definition, and this is exactly the quote that I just read to you guys from the CFTC Taxonomy Act. He was also retweeting out Digital Perspective's tweet here, stating, if I'm reading this correctly, USD Tether is operating illegally according to the new stablecoin bill. So it shall be unlawful for any person to engage in the business of issuing a payment stablecoin directly or indirectly in the United States through any means or instruments of transportation or communication in the United States or to a person in the United States. So really kind of making it very, very clear that it's only going to be the stablecoins that we want to be regulated that are going to be regulated in the US, and all other stablecoins just do not comply with our US regulations. So it's going to be USDC. Ripple has also just now announced that they are going to be throwing their hat in the ring too, creating a stablecoin on the XRP ledger. So, I mean, is it any surprise that that is what they've decided to do? Smoke with more here. There's no time to waste on US stablecoin legislation. Congress must move to create regulatory clarity for US-based stablecoin issuers in the United States. Now, we already know XRP is non-security status, and now Ripple is issuing a stablecoin. Congress must move quickly to pass tailored legislation providing regulatory clarity to US-based stablecoin issuers. And again, here, there is no time to waste. And they should be a top priority. I mean, stablecoins are the lifeblood of crypto, I gotta say. If you want to have that flexibility, you're definitely buying in or cashing out with a stablecoin. Jake Chervinsky here bringing up some good points. Stablecoin legislation should be a top priority for everyone who cares about crypto policy. But the bill published today is deeply flawed. It appears to ban nearly everything except the narrow ban of centralized custodial stablecoins. This would be far worse than the status quo. 1 year ago, I testified in Congress on the question of how stablecoins should be regulated in the USA. In my testimony, I outlined 5 principles that any workable piece of legislation must follow. And so he just outlines that down here. He says today's draft bill violates that principle. Instead of setting out reasonable requirements for custodial stablecoins, the bill picks winners and losers and puts an end to innovation. So, people are already picking up on this. And so, I get why they're doing it. They want to kind of tamp down the illicit use of stablecoins and bad actors around the world. But I gotta hand it to Jim Willie. I gotta say, this stablecoin legislation is not going to affect the Brics nations. In fact, Brics momentum and XRP adoption is going to ramp up, especially if there are sanctions against stablecoins that, some countries want to use, like USDT. This one courtesy of Rob Cunningham here on Twitter. Listen to Jim Willie discuss what the Brics nations are doing and how XRP is going to be pivotal in all this.
I mentioned the surrender in Ukraine. I mentioned the launching of competing CBDCs. There's not going to be one. There might be 12. And anyone who thinks that everyone's going to follow Basel, you're dumb as a rock. You're dumb as a rock. The Brics are now a union without unity. And it's a very interesting union. They do not have unity. What they have is a common objective, and it's de-dollarize. We're going to see not dissension. We're going to see apparent disorganization. by the end of this year within the BRICS, the West is going to say the BRICS doesn't really exist. They have no unity because they're not following a single method of trade payment. They're going to use the Russian ruble. They're going to use the Chinese yuan. They're going to use maybe a digital currency coming out of Persia, Iran. They're going to use gold tokens for the nations that have sufficient gold reserves. The Chinese just announced the Chinese blockchain platform. And the BRICS adopted a similar platform also. Maybe it's the same platform. I don't know who's going to run it. We're going to see XRP used before long. This is going to bring about exactly what the BRICS want: decentralization. And we're going to have so much decentralization by the end of this year and early next year that the dumbasses in the West who don't know how to analyze out of their jockstrap are going to say the BRICS are disunited. No, they've achieved their goal of decentralizing the alternative options for trade payment. It's going to be very exciting.
It's always a pleasure to listen to Jim Willie. But note, guys, before long, the BRICS nations are going to use XRP. This coming directly from Jim Willie here. I mean, it makes sense. The risky de-dollarization campaign hangs in the balance once we do have stablecoin regulation. But BRICS nations do have the power. They have the resources and they have the money, guys. And once they start using XRP, well, I think the rest is going to be history, but that's just my opinion. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.